Sanjay Shah, Managing Director of Prudent Corp joins us now. Sanjay, good morning. Thank you for joining us. Logically makes sense. Risk reward ratio is not favorable. Don't buy lump sum. But if I'd extend the timeline, and for somebody who wants to buy lump sum and say that I have a 3 to 5 year time frame or 5 year beyond, why should mutual funds say no?
No, I think logically you are right, Nikunj bhai. But if you look at historically, people always try to chase the return. And if you look at currently the 1 year return and 3 year returns of small cap category has been upward of 30%. And the incrementally in the first quarter of current year, we have been seeing that a lot of money is coming into small cap category. And that shows the reason that people has been coming with a lump sum money only because you look at the return. So the view from a 5 year perspective of investing in small cap is still very constructive. But if they are saying that no, we don't want to take the lump sum money of 50 lakhs and 1 crore, but you continue to invest through SIP of 5 lakh rupees through, because if you look at Reliance, they have said that up to 5 lakh rupees per PAN, they can take the SIP. So I think that's a very, what you call the constructive way of taking money into a small cap category, which otherwise has a lower liquidity and it's normally very volatile. So if you look at, we have seen that in March 20, the fall in small cap category was very intense. It took a lot of time to recovery, but once it recovered, I think it has given a very good return. So from a retail point of view, because we manage the retail assets of the Indian investors, we believe that investing in small cap through SIP route is a very good way of investing. So we are very constructive. But if they are not taking money through lump sum, I think it's a very constructive way of saying no.
Sanjay, I wanted to understand your views because clearly we had seen from the month of March, there was a lot of momentum and a lot of fervor within a lot of these small cap funds. Do you think that now we are seeing valuations perhaps tilting towards the higher side?
So if you look at the, I think the market cap of small cap in the overall market cap, I think it is inching towards 15%. So the normal band of small cap contributing to a total market cap is normally between 10 to 17%. So probably we may not be cheap in the overall market cap, but we are definitely going to a fair value zone. So what I'm just trying to say is that for a retail guy or somebody who's coming to a mutual fund, I think timing by way of valuation would be very difficult. So I think we sincerely suggest retail guys to continue to invest in small cap through SIP, because I think virtually we believe that still the category offer a lot of value, but you should not do a lump sum at this point of time.
Some in large cap, because large cap stocks have also seen a 15% run up. ऐसा नहीं है वो नहीं चले.
No, that is a call on the overall market. So I think probably I think the investors should look at nothing less than 3 to 5 years from the point of investment perspective.
My other big question is that while last 1 year, because of this, thankfully because of the move which has happened in last 6 months, are looking strong. But if I really go beyond 3 years, 5 years, it goes back to that same question, which is why are mutual funds underperforming their benchmark? How long will that continue? And should one really not go for direct plan when I have to buy index only? Good old debate, we've discussed it, debated it, but it's like saying subah ki chai roz debate karo. We can talk about it.
So I think that is again probably when we are saying that investors are chasing return, I think the important role is always played by the advisor to make sure that he should not buy only because of the return, and they invest through I think SIP route, they invest from a leg. So I think probably you just need to make sure that the kind of value which advisor add by managing the emotion is so significantly larger that this 1 or 2% of difference doesn't make huge difference, frankly. And that has been proven globally also. Forget about the Indian market. That advisor plays a huge role in managing the emotions. So that's why I'll just give you, let's say, example of Prudent. Today we have a 550 crore of SIP book. Within that we have almost 18% money coming in small cap through SIP. So my monthly SIP book is of about 80 crore. So that shows that we also advocate investing in SIP. But let us look at the SIP from a small cap through a SIP route. And that is the important value which advisor has to add, sir.
Sanjay, before we wrap it up, let's look at time frame. Next 6 months, very short term. Which to your mind is the best category? Next 3 years, which could be a best category stroke a mutual fund, hybrid variety, and 5 years plus. So 3 months, 3 years, 5 years plus. If somebody is watching the show and if they want to benefit from your advice, what would you advise?
Sir, anything less than 1 year in the current situation has to go into a liquid fund because it's very, very difficult for somebody to say what will happen in next 1 year. For 3 years, we still are very, very constructive on the large cap and the balance advantage category, which is a hybrid category, which goes on making allocation in the both the asset class, debt and equity based on the market parameters. So from a 3 year perspective, large cap and the probably asset allocation category, multi-asset allocation category, balance advantage category. From a 5 and 7 years point of view, we are still very, very constructive on the mid cap and the small cap, apart from balance advantage category for sure.
Thank you for taking time out and joining in and giving us a sense as to what the outlook is when it comes to those small cap funds.